Hey guys, just responding to the question about whether 8 and 9% is actually really an achievable target. Personally, I believe so. Let me give you some ideas. If you look at the long-term returns of the S&P 500 the last 30 years, it has been about 9.9%. Now, I'm specifically talking about really passive investments where you actually don't need to do anything, right? As opposed to active investments where you get a little bit more. So S&P has done 9.9. If you look at gold, actually in the last 20 years, it's closer to about 9%. That's what gold has done, which means that you buy it and you do nothing. That's your compounded return. Similarly, if you are picking your own stocks, and this requires a little bit more active management. If you look at some Malaysian stocks today, some very stable ones, you guys will call blue chip, we call investment grade. Really what you're looking for is probably a 3 to 4% dividend yield, maybe up to 5, which you can find. And I'm not saying 5 this year, meaning that if you buy it this year, at the current price because it's low, right? Or it pays you that dividend. And we're not talking about stocks that just pay you dividend 1 year. I'm talking about stocks that have been continuously profitable for the last 10 years, continuously dividend paying for the last 10 years, right? You can find quite a number of these stocks. So really what you're looking at is about 4 to 5% yield on your dividend, and another 4 to 5% on price appreciation over the long term. I don't believe this is also impossible, right? It depends how you construct your portfolio as well. Now, if you want to be absolutely take like the minimum level, if you look at just EPF, which is absolutely passive, right? EPF have been doing about 5 to 5.25%, and that's absolutely passive. But can you imagine if you can do it yourself and you structure it? I'm not even factoring real estate that you can personally buy yourself to get that kind of returns. But 8 to 9% is not unachievable. It's also not very high risk if you know what you're doing. I think that's the main point. So if you're talking about purely passive, it is achievable. What I think is actually more difficult is not the 8-9%. What is more difficult for each and everyone to actually do it, number one is actually discipline, right? You say you're going to start out with this much every month, you're going to put money in every month. Now, it's a very difficult thing to follow for an average person, because you're going to get busy, time gets in the way, you have kids, you have to go pick them up for tuition, you have to do all sorts of things. Life gets in the way, right? It's called life, right? That I find probably more difficult to do than actually finding the right investment. Number two, right, apart from discipline and putting your money aside every month, number two, the second most difficult thing for an average investor to do is actually to stick it out through the tough times. What I mean is that, markets move in cycles, right? So when it goes up, it's all great, you get out of bed, you're floating 2 feet above the air, right? But in times where market is down and times where the world is in a recession, and it does happen. It is very clearly documented that recessions and booms will happen, right? It's sticking out during the times when it's bad. How do you resist yourself from, oh, you know what, I'm losing confidence, I'm going to sell everything and put it back into cash, right? So I think those are the two most difficult things that you need to overcome, right? And it's really not the 8 to 9%, right? If you're disciplined and you can stick it out through the bad times, it is absolutely not impossible.